let us see a very interesting trade which is extremely low risk and take care of wide range of markets. So I am on Monday, that is the first day of May, morning 9:30 to start the trade. Now where is the market? Market is at 24,215. I am talking about a monthly trade, and these kind of trades are pretty good for working professionals. Now market is 24,200. I will just go maybe 200 points above. So I'll go to 24,400 and I will buy one call. So 24,400 is one call. I will go another 300 points away. So I will sell two calls of this. 24,400 I have purchased one call. 24,700 I will sell two calls of this. If you see here, I am selling two calls of this. Just see the trade very carefully. It's very interesting and it is set and forget kind of a trade. And I'll go another 300 points from this and I will buy 25,000 one call. This is one part of the trade. In case market goes up, it is really going to be very beneficial for me. But the range is very thin. I want to do something else also. So market is 24,200. I'll just go little bit below market. Maybe I'll go to 24,000 on put side. Earlier I was doing all the trades on the call side. Now I am going on the put side. So I will buy one put of 24,000. I will sell two puts of 300 points below, which is 23,700. And let me do that. 23,700 I will sell two put. And again I will go 300 points below that and I will buy one put of 23,004. So this has completed my trade. This is a structured trade. This has a very wide range, and there is a point in between these two triangles where there can be a loss. But here you see as an expert trader what is happening to the blue line. Blue line will ensure that okay, we are not going to have any loss even if market remains in the middle red zone of the area. And if you see, overall this trade can give me a very good profit of 15,770 rupees and maximum loss is 3,700. So a decent risk reward of 1:4.2. And here I will say the lower break-even point is 23,459 and upper break-even point is 24,944. Middle break-even points I am not considering because I am not going to keep this trade till expiry in any case. I am going to lose this middle area loss only if I keep the trade till last day of the expiry, that is 26th of May. Before that, it is not going to give me even a single paisa loss. I am going to explain you the logic of making this kind of a trade. Plus, let me explain the trade once again. On put side, what I have done, I have purchased 24,000 put, one lot here. I have sold two lots of 23,700. So I have gone 300 points below that. And then I have gone 300 points below that. I have purchased another put. So 24,000, 23,700 and 23,400. This is the put butterfly. 1 to 1. 1 buy, 2 sell, 1 buy. This is a debit trade. And then same thing I have done on the call side. 24,400 call I have purchased. 24,700 two lots I have sold. And 25,000 I have purchased one. You have to set up this trade and then you can see that okay, for wild moves of the market also this trade really works well. And if I show you Greeks, this trade can be done even in a low VIX environment because this is a positive Vega trade. From here, if VIX goes up, this trade will be beneficial for us. And I'll show you whatever adjustments are required in this trade. So please stay till the end of the video to understand the adjustments in the trade properly. Welcome to another video by Option School. This is your friend Pradeep Singla. You can join our YouTube WhatsApp community. Link is given in the description and we provide you pre-market report every morning. Now, once I have created the trade, initially the trade might look as if it is very complex. It is not complex. I have already explained you. It is a combination of put butterfly and a call butterfly. Once you have created the trade, now there are hardly any adjustments to be done unless and until market makes a very big move. And as I said, in the middle of the payoff, whatever negative thing we are seeing, that is safe till the expiry day. And you keep a very close eye on this blue line as I move ahead in the dates for this trade. And since Vega is positive, that means this trade can be done in a low VIX environment also, right? The trade is taking around 1.9 lakh. So I can do it in, let us say, 5 lot. And this can be very well my fourth strategy to generate 1 lakh rupees per month. I have already shown you 3 strategies and this is the 4th one, right? So my maximum losses in this trade 18,000 by spending 9 to 10 lakh rupees. If my maximum loss is 18,000, this is good trade actually. There is hardly any risk and 1 one adjustment, even this 18,000 can be reduced. My maximum profit is 78,000. Obviously, I'm not looking for 78,000. I am looking for 2 to 3% kind of a return from this. So let me move ahead and let me show you how this trade pans out tick by tick. For better reach and visibility, I request all of you to kindly click on the like button and subscribe to the channel. All your likes and subscriptions are very, very valuable to us. Thanks in advance. Let us see now first day what happens to this trade. Okay, market has gone down a bit. Trade is giving me 34.78 as a profit. But more important to see that, okay, my outer break-even points, which is 23,459 and 24,944 are totally intact. There is no issue. And you see the blue line. Just after first day, the blue line has started coming up. If I show you one day back from where we started the trade, the blue line was at a zero line, almost horizontal line. But just after one day, you see what happens. The blue line has started coming up. So that means even if the market stays between the two peaks, we are not much worried about this. Let us move ahead. Next day, no adjustment, nothing to be done. Let us move and see what happens next day. Market again came back to the center of the trade, just few points down and there's few points up. No problem. Trade is still little bit profitable and there is no issue and there is no adjustment required at all. Please stay with me for just 5 more minutes and we will show you all the adjustments of this trade, which will be very simple also. Next day, okay, market has started moving up. No issue. I'm still making 34.40 in this trade, which is a good profit. And you see VIX has started going down rather. We wanted the VIX to go up, but it has gone down. Why I know? Because you see my estimated margin requirement has got reduced from 9.5 lakhs to 8.98. No issue. Still, the trade is going very well. Only thing I need to keep in mind that I am not going to keep this trade till expiry if market is within this zone, red zone in the middle. Next day, again, no issue. 4,200 rupees profit. Next day. Now the market has really fallen. Trade is giving me profit, but now I can see very clearly that it is entering the lower butterfly. It is the put butterfly which will start giving me profit. It is not the call butterfly which will give me profit as of now. But still early days, it is already 11th May only. We will just wait for some adjustments to be done if required. Next day. Okay, now I can very clearly see market has gone past even my put butterfly peak. So I need to protect this trade on the downside. Hardly very marginal loss of 584 rupees, which is perfectly okay. So what I will do now I will take my chances. So what I will do, my call buying, which is 24.2 rupees, I will just clear it off. This is the last call buying which I have done, which is for 25,000. I don't think at this point market can go 25,000. Even if it goes to 25,000, we will definitely change our stance in the trade. So I will scare off this and I will book this loss. Now once I have done that, the trade has become extremely safe for me. If market tanks down also, there will be a very marginal loss of 8-10,000 rupees. We will do some adjustments to protect that also. In the middle also, there is hardly any loss and we will see how we can mitigate that loss also just in few minutes. Let us see. Now we need to be with the market. We should not do anything extraordinary right in the beginning. I can sell some extra calls, but then that would not be good in case market really goes up, right? Or if I can sell some extra puts, that will also not be useful in case market tanks down. I will stay with my structured trade only. Now you can say, sir, the margin requirement has increased, definitely. But since we kept 10 lakhs rupees for this trade, what we will do, instead of this 25,000 call which we purchased, we will buy 25,000 weekly call, and that will reduce my margin and that will hardly cost me 1 rupee or 50 paisa only. If I show it here, it will totally spoil the payoff diagram, but that can be easily done. So we will be very well within our original margin requirement, right? Let us see. We have not done any adjustment. We have just scared off one set of extra call. Why? Because market has tanked down. Next, okay, market is again going down. I am not in a loss. I am okay. I'm ready to bear this kind of a pressure from the trade and I can wait because most of the damage what could have happened in the trade is already controlled. Next, okay, now again I am making some 4907 profit in the trade, which gives me a lot of courage to stay in the trade, right? Next, now 6955 is the profit, which is good. Next, again, this is a volatile market. It's one day coming up, one day going down, but I am okay with the trade so far, right? Let us see next. So for these kind of volatile markets, these kind of structured trades are really useful. Why? Because I am not chasing the markets. I have created the trade and I am sitting very peacefully in the trade. I know some loss is hardly anything and I can definitely get a decent profit in the trade. Now I am making 11,440 in the trade. If I scare off 50% of my positions, all the loss will be nullified except the loss in case market really moves up sharply. If that happens, definitely we need to buy that call again. But as of now, things look very good and trade is giving me profit also. See the blue line in the middle also. The blue line is above zero line again. So even if market moves up sharply, crosses the middle red area, and then after that enters the upper triangle, then also I can sit in the trade, and that would mean that market has already moved almost by another 700-800 points, which is still okay with me because the peak of my upper triangle is around 24,700. Market right now is 23,757. So even if market moves up by 1,000 points from here, I am pretty much okay with that. Let's see next. Okay, market has gone down. Trade is still giving me decent 10,000 rupees. Next, again moving up, I am making now 15,000 rupees roughly in this trade, and it is already Thursday, May 21st. I should be very careful that okay, I will not carry this trade till expiry in case market is in the middle red area, right? Next day, 17,800. I think the trade has already done all the job. No adjustments at all. Just I have set up the trade and it is set up and forget kind of a trade. Nothing has happened. Although market is pretty volatile, it is going up, going down every day, but still it is giving me a decent control and decent profit over. Okay, it has moved up, right? So this trade is giving me around 13,000-14,000 rupees, and now we are on Monday, May 25th. So we should not take our chances to stick to the trade. Although if you see in the middle, there can be a 10,000 rupees loss. So from 14,000 rupees profit to 10,000 rupees loss is not a very wise thing to do. So definitely we should be booking our trade at this stage if we have not booked when we were getting 17,000-18,000 profit. Just for academic sake, let me take this trade to expiry day also. See, our profit is now only 1,400 rupees, and if I sit till end of day, luckily market has tanked down a bit and the trade has given me 70,000 profit. But I should not do this. I should definitely get out of this trade maybe by Monday morning and do not keep things to chances. Now here there can be some more better adjustments wherein I will be able to remove all the red line area from the payoff diagram. But then because already the trade is a 6-leg trade, and I just wanted to give you a hang of how these kind of structured trades can be done by working professionals so that you are not required to do things again and again. Maybe in our upcoming part, we will definitely talk about how to improve the profits in this kind of a trade. These kind of frameworks are very useful for option traders, especially when we see that markets are very volatile and more than 80-90% of traders lose money because they keep on chasing market. Now, how to apply these kind of framework for different market in 3 different strategies that we have shown in our workshop. So we have 3 workshop recordings which we have converted into courses. One is for iron fly, one is for iron condor, one is for double friendly spread. I will say if you are a working professional, iron fly is best for you. If you are a trader who can spend some time, definitely you can try all the 3, especially when VIX is low. Calendar spread will be more useful to you, but one should have all the tools in his kitty. Trade for low VIX, trade for high VIX, trade for middle VIX. So that is why we have created these 3 videos, and we have shown you the framework plus 12 months of back testing also, so that the application of framework is also very clear to you. If you are interested in enrolling for the courses, you can talk to the numbers given on the screen. Just talk for 5-10 minutes and you will get all the clarity whether this course is good for you or not. Although you can always do a chat, but I think it is better if you just pick up your phone and talk to these guys only for 10 to 15 minutes to get absolute clarity. In addition to that, we have our exclusive memberships where we give you exclusive members videos. There are 3 kinds of membership: Silver, TOS Insights and TOS Premium. You can just click on the join button and you will get details of what are these memberships about. Leaving you with another interesting video on the topic. Hope you will definitely like it. Do not forget to subscribe to the channel and share this video to someone whom you think it will be useful. Thanks for watching. See you in the next video.